It has now gone up. The Bank of England has announced it's raised rates by 0.25 base points, but says it is ready to act forcefully. Let's bring in Ed Conway, who's at the Bank of England for us. This was expected, Ed, but what impact do you think it will have?
That's right, 0.25%, so a quarter of a percentage point. Interest rates have just been increased by that much. They are now up to 1.25%. That is the highest that they have been since 2009. And it's also the fifth successive meeting at which the MPC, the Monetary Policy Committee here at the Bank of England, has decided to raise interest rates. So put all of that together, and there's clearly one direction. It's worth saying, though, I'm just kind of scanning as the news comes through, because we'll also get the minutes on precisely which members have voted for what. It's worth saying, a lot of people thought there was a good chance that the bank might go even faster than that, raising rates by a full half a percentage point. Remember, last night, the Federal Reserve, that's America's central bank, they raised their interest rate, their main interest rates, by 0.75%. So the Bank of England doing this, some people will look at them and ask the question, are they moving a little bit too slowly given what we're seeing in the United States? They will argue that this is a kind of sense check, that there are lots of risks for the economy at the moment, that when you look at the state of the UK, yes, there is inflation incredibly high at the moment, but there is also the risk that we're facing a big energy price shock. That's pushing down on demand, and that means that people have their own issues to deal with at the moment. It's worth saying that just looking through some of the details that we're seeing in the minutes, they have also said that they are going to be expecting inflation, or at the moment their existing forecast says inflation's going up above 10%. They're now saying they expect it to go up towards 11%, so even higher than they previously thought, and that also that GDP in this quarter that we're in at the moment is going to fall. I would say that's kind of slightly more of a statistical, one of those statistical aberrations, because we have an extra bank holiday in this quarter and there's a lot of other things going on. But it does underline the fact the economy right now is not doing tremendously well. We are, if not stagnating, then potentially kind of having very weak growth right now. And that is part of the explanation for why the bank, although they are facing inflation so high at the moment, 9%, going up, they say now, to 11%, why they've only raised interest rates by 0.25%. But as I say, a lot of people will look at them and say, perhaps you could have gone even faster, even further, even though there are many people across the country who will feel the impact of this, of course, on your mortgages. It will, of course, increase savings rates as well. But a lot of people in high levels of debt at the moment, so this will affect them. So that's the decision that we've just had from the Bank of England. Interest rates up by 0.25% to 1.25%, a 6-3 vote. So there are three members of the Monetary Policy Committee who are pushing for slightly higher interest rates, but nonetheless, there's 9 members on there. It's a majority decision. It was 6-3 in favour of 0.25% increase in interest rates.